All right, let's dive into the latest from Roblox. We're looking at their Q3 2025 report. And this one was kind of a head-scratcher in some ways, a massive beat and raise across the board. But then the stock just tanks dramatically.
Yeah, it's that classic growth stock tension, isn't it? The numbers, I mean, the actual performance in Q3 was stellar, explosive even. But then you look at the guidance, what they're telling the market about the future, and it reveals this huge new commitment to spending, aggressive spending.
Okay, so let's unpack that beat first, because the numbers themselves are pretty stunning. Daily active users, DAUs, hit 151.5 million.
Yeah, 151.5 million, that's up 70%. 70. Year over year, analysts were thinking, what, 132 million? So they just blew past that.
And those users are spending bookings, which is really the key metric here.
Right, the cash they actually collect up front for Robux.
Exactly. That hit $1.92 billion.
Again, up 70% year over year. Consensus was way lower, like $1.72 billion. So a huge beat there, too.
And revenue, which gets recognized differently, still strong, up 48% to $1.36 billion. But that bookings number really shows the cash pouring in right now, doesn't it?
It absolutely does. And that's critical when you look at their spending plans. I mean, sure, they still had a GAAP net loss, about $257 million. But even that was better than expected.
Okay, but the cash flow.
Ah, the cash flow. That's where the strength really shines. Operating cash flow jumped 121% year over year.
121%.
Yeah.
That's wild for a company this size.
It is. $546 million in operating cash flow. And free cash flow, and the cash left after, basic CapEx, that was up 103% to $442.6 million.
Nearly $500 million in free cash in one quarter.
Right. And the CEO, David Baszucki, basically said, look, this shows we're making tremendous progress towards getting 10% of the global gaming market. The company's just generating cash like crazy.
Okay, so that sets up the big question perfectly. World-class performance, cash flow exploding. Why the panic? Why did the stock drop, 10, 14% right after the report?
It's the forward look. It's the cost side of the equation. They came right out and said it in their guidance. Operating margin could decline slightly year over year.
Oof. Yeah, investors don't like hearing that when growth is this strong. They want margin expansion.
Exactly. And this potential decline is being driven by two big things, two areas where costs are accelerating fast.
Okay, what are they? What costs could possibly overshadow almost $500 million in free cash flow?
Well, first, it's about the creators, what they call creator economics. The developer exchange fees, that's the money Roblox pays out to the people actually building the games and experiences.
The ones driving all that engagement.
Precisely. Those fees grew 85% year over year to nearly $428 million. And they're leaning into it. They actually increased the DevX payout rate by 8.5%.
Wait, they increased the payout rate? When they're warning about margins, that seems counterintuitive.
It does on the surface, right? But think about it strategically. It's basically an arms race for talent. Roblox lives and dies by its creators. They need the best developers building the next big hit on their platform, not somewhere else.
So paying them more, even if it hits margins now, secures future content, future bookings.
That's the bet. That 8.5% hike from $3.50 to $3.80 per 1,000 earned Robux, that's significant. It's an investment in loyalty, in keeping the content pipeline full, an upfront cost for future growth.
Okay, so that's one driver, people costs, essentially.
Yeah.
What's the second big one? You mentioned infrastructure.
Yeah, the other one is a massive hike in capital expenditures, CapEx. They raised their CapEx guidance for the full year, get this, by $158 million.
Whoa. An extra $158 million they weren't planning to spend just a quarter ago.
Exactly. So now their total CapEx guidance for 2025 is $468 million. And this isn't just routine stuff. This is serious strategic investment to handle the demand surge and build out future tech.
Okay, that's the number that likely spooked the market, right? Nearly $500 million in CapEx this year. That's hard cash going out the door, hitting those free cash flow projections immediately.
Absolutely. The market sees the growth, loves it, but it sees $468 million going into servers and infrastructure instead of profit. And it gets nervous. Management is making a very deliberate choice here. Platform stability and future capability over near-term P&L.
Let's dig into that. Where exactly is this $468 million going? They framed it as prioritizing safety and long-term growth. What does that actually mean in terms of investment?
It seems to be flowing into two main strategic buckets. The first is trust and safety.
Okay, safety. What does that entail?
They're aiming for a gold standard in communication safety. That means rolling out age estimation tech using facial estimation.
Facial estimation.
For everyone.
For all users accessing communication features, that's the plan. by early next year. Plus, new policies to limit interactions between adults and minors who don't know each other. It's a huge undertaking, technically and policy-wise. Why the big push now? Regulation. Attracting older users and brands.
Both, likely. They know they need an undeniably safe environment to keep attracting that valuable 13-plus demographic, and especially the 17-plus group. And yeah, big brands and advertisers demand it. Plus, getting ahead of potential global regulations makes sense. It might even ding engagement slightly short-term, but they see it as essential for long-term viability.
Right. A necessary cost for the future.
Yeah.
Okay, what's the other big spending bucket? The one tied to that huge CapEx jump.
That's all about AI, building their own AI infrastructure. That $158 million hike, a lot of that is going straight into buying high-end GPUs. They plan to deploy them at scale in their own data centers starting this quarter, Q4.
In their own data centers, why not just use AWS or Google Cloud like everyone else?
Control and data. Roblox generates, I think the number was over 13 billion hours of interactive data every single month.
13 billion hours a month.
Yeah. It's an unbelievable amount of proprietary data about how people interact in 3D spaces. They want to use that data to build their own specialized world models, not just generic AI. They're focusing on something they call 4D creation.
Okay, 4D creation. What are we talking about here? What does that mean for a user or a creator?
Think beyond just typing text to get an image. Think interactive functional objects. So a creator could maybe type, make me a working sci-fi car. And the AI doesn't just generate a picture, it generates a 3D model that you can actually drive within the Roblox world, following its physics.
Ah, so AI generating usable things, not just static assets.
Exactly. Functional, interactive creation. It lowers the barrier for creators, makes building experiences faster and potentially much more sophisticated. That feeds right back into keeping the platform vibrant and full of new content.
This all sounds incredibly ambitious, very long-term focused. But it relies on the platform's current momentum staying strong, right? Does the report show that underlying health?
Oh, yeah. The platform is buzzing. It's not just overall growth. Specific experiences are going viral at an incredible scale. Take Grow a Garden. In July, it set a world record, apparently. Nearly 22 million concurrent players.
22 million people playing the same game at the same time.
At the exact same moment. And then more recently, another one, Steal a Brain Rot, supposedly hit over 25 million concurrents.
Wow. That kind of scale is just hard to comprehend.
It really is. It shows the network effect is incredibly powerful. And crucially, this growth isn't just kids anymore. The 13-plus user group grew 89% year over year. That's where the monetization potential really is.
And it's becoming more global, too.
Definitely. DAUs outside the US and Canada were up 81%. Strongest engagement growth was in Asia Pacific. Things like rolling out regional pricing are helping too, boosting how many people actually spend money, especially in markets like Indonesia.
So the core platform is healthy, growing fast, attracting older users, going global, all feeding the machine that generates the cash.
That they're now pouring back into DevX, safety, and AI infrastructure.
Right. Which gave them the confidence, despite the spending warnings, to actually raise their full-year bookings guidance. Now $6.57 to $6.62 billion.
Yeah, they explicitly said this puts them at least 2 years ahead of their previous long-term targets on bookings.
Okay, so let's recap the narrative here.
Okay.
Roblox crushes Q3, record cash flow. But instead of banking it, management hits the accelerator. They divert that cash flow into massive long-term bets. More money for creators, gold standard safety, building their own AI powerhouse, basically trading today's margin for tomorrow's dominance.
And that trade-off is crystal clear in the Q4 guidance. After posting almost $500 million in free cash flow, their guidance for Q4 adjusted EBITDA, which is, a proxy for operating profit, is somewhere between negative $20 million and positive $10 million.
Wow. So the CapEx and DevX spending hits the profitability metric almost immediately and very hard.
It does. It's a stark contrast. They're betting the farm almost literally on infrastructure and talent. They believe this aggressive spend is the only path to secure the platform long-term, fend off competitors, satisfy regulators, and keep attracting those valuable older and global users.
Which leaves us with a final thought for you, the listener. They're generating tons of cash. Is this spend it all now strategy nearly $500 million on CapEx this year alone the right move, the necessary move, or is it too aggressive? Will the market lose patience waiting for these big AI and safety bets to pay off before profitability returns?